Today we are examining an interesting discussion involving two currencies that frequently attract attention from currency followers, the Iraqi Dinar or IQD and the Vietnamese Dong or VND. The question being discussed is whether these two currencies could appreciate at the same time, and whether developments in Vietnam could somehow be connected to future changes involving Iraq. The comments we are analyzing come from Newshound Guru Tom, who stated that he personally holds both currencies and believes Vietnam is making important progress, particularly in relation to FTSE Russell developments. He also pointed to Iraq's history of making exchange rate changes relatively quickly when policy decisions are taken. Now, it is important to separate opinion and speculation from confirmed economic developments. Holding both currencies does not establish that they will move together, and there is currently no automatic mechanism that requires the Iraqi dinar and Vietnamese dong to appreciate at the same time. These are two independent currencies managed by two different central banks, operating under different economic conditions, monetary frameworks, and policy objectives. However, there are some broader global financial trends that make the comparison interesting, particularly when looking at market accessibility, foreign investment, financial market classification, economic reforms, and exchange rate management. Let's begin with Vietnam, because the FTSE Russell reference is particularly important. FTSE Russell is a major global index provider, and changes in a country's market classification can influence how international investors view and access that market. When a market receives an upgrade or moves toward a more advanced classification, the development can signal progress in areas such as market infrastructure, accessibility, settlement systems, transparency, and investor participation. For Vietnam, these types of developments are significant just because the country has spent years strengthening its financial markets and increasing its integration into the global economy. But there is an important distinction here. An improvement in Vietnam's market classification does not automatically mean that the Vietnamese dong will suddenly experience a dramatic revaluation. Currency appreciation is influenced by many factors, including inflation, interest rate policy, trade flows, foreign exchange reserves, capital movements, productivity, economic growth, and the actions of the State Bank of Vietnam. Vietnam operates a managed exchange rate system, meaning authorities have tools available to influence currency conditions, while still allowing market forces to play an important role. Therefore, when analysts say the dong could appreciate over the next year, that should be understood as an economic outlook rather than a guaranteed event. A stronger currency could develop gradually if Vietnam continues to attract investment, maintain strong exports, improve productivity, and manage inflation effectively. It could also remain relatively stable if policymakers decide that exchange rate stability is more important than allowing significant appreciation. This distinction matters for Vietnamese dong followers, because a stronger economy and a stronger currency are related, but they are not exactly the same thing. Vietnam can experience strong economic growth without allowing the dong to rise dramatically against the US dollar. In fact, policymakers may sometimes prefer a stable and competitive exchange rate because exporters depend on predictable international pricing. Now let's turn our attention to Iraq and the Iraqi dinar. The comment that Iraq has a history of changing its exchange rate in a single day is worth examining carefully. Iraq has indeed experienced significant exchange rate policy changes in the past. But that historical fact does not mean that another major adjustment is inevitable or that one is scheduled for a specific date. The Central Bank of Iraq has an important role in maintaining monetary stability, managing foreign exchange conditions, and supporting the country's financial system. Exchange rate decisions are influenced by broader fiscal and monetary considerations, including government finance, inflation, foreign reserves, banking sector reforms, international financial relationships, and the structure of Iraq's economy. For Iraqi dinar followers, the key issue is therefore not simply whether Iraq can change its exchange rate quickly. The more important question is what economic conditions would justify such a decision, and whether policymakers believe the change would improve stability and economic performance. Iraq is a major oil-producing country, and oil revenues remain central to government finances and foreign exchange availability. This gives Iraq a different economic structure from Vietnam. Vietnam has developed a highly export-oriented manufacturing economy with major participation in global supply chains, while Iraq remains much more dependent on hydrocarbons. These structural differences make it difficult to assume that the two currencies would follow identical paths. At the same time, there is a broader connection between the two countries that is worth watching. Both have been working to deepen their participation in the international economy. Vietnam has focused heavily on trade, manufacturing, investment, and financial market development. Iraq has been focused on banking reform, financial compliance, modernization of payment systems, and improving connections between its banking sector and international financial institutions. Those reforms can matter for the long-term value and credibility of a national currency. A currency's strength is not determined by the number printed on a banknote alone. It depends on confidence in the economy, monetary policy, fiscal management, financial institutions, productivity, and the ability of businesses and individuals to use the currency effectively. This is where the discussion about IQD and VND becomes more useful. Rather than asking whether the two currencies will suddenly move together, investors and observers should ask whether both countries are making structural improvements that could support greater currency stability over time. For Vietnam, market access improvements and continued integration with global investment networks could support greater demand for Vietnamese financial assets. For Iraq, successful banking reforms, improved financial transparency, stronger institutions, and greater economic diversification could strengthen confidence in the country's financial system. However, none of these developments guarantees a specific exchange rate. In the short term, both currencies could continue to experience fluctuations based on global dollar movements, interest rate expectations, commodity prices, trade conditions, and domestic policy decisions. The US dollar remains the dominant reference currency for international trade and financial markets. So changes in global dollar strength can affect both IQD and VND, even when domestic economic conditions have not changed significantly. For Iraq specifically, oil prices can be especially important. Higher oil revenues can improve government foreign exchange inflows and fiscal conditions, while lower oil prices can create greater pressure on public finances. This means the Iraqi dinar's outlook cannot be analyzed independently from Iraq's fiscal position and oil-dependent economic structure. Over the longer term, the picture becomes more interesting. If Vietnam continues developing its financial markets, attracting foreign investment, increasing productivity, and expanding higher value manufacturing, the economic foundation supporting the dong could become stronger. But that does not necessarily mean an overnight revaluation. It could instead appear through gradual currency movements and greater financial market stability. For Iraq, long-term progress could depend heavily on diversification, away from excessive oil dependence, modernization of the banking system, private sector development, improved investment conditions, and stronger integration with international financial networks. If these reforms succeed, they could provide a more sustainable foundation for confidence in the Iraqi dinar. This is also why followers should be cautious when hearing claims that IQD and VND must appreciate together. There is no established economic rule that connects their exchange rates in this way. The two countries may experience positive economic developments during the same period, but that does not mean their currencies will move by the same percentage or on the same day. The idea that both currencies could benefit from improving economic fundamentals is reasonable as a general concept. The claim that they are guaranteed to experience a simultaneous major revaluation is much stronger and requires evidence that is not provided by the discussion we are analyzing. The most responsible approach is therefore to monitor actual policy decisions rather than predictions. For Vietnam, that means watching central bank policy, inflation, trade performance, foreign investment, market access reforms, and developments involving international index providers. For Iraq, it means watching central bank policy, government fiscal decisions, banking reforms, foreign exchange regulations, reserves, oil revenues, and broader economic modernization. Another important point is that currency followers should distinguish between a redenomination, an exchange rate adjustment, and genuine appreciation. These are different concepts. A country can remove zeros from its currency through redenomination without creating additional purchasing power. An official exchange rate adjustment changes the stated value of the currency against another currency, while market appreciation reflects changing supply and demand conditions. Understanding these differences is essential when evaluating headlines about potential currency changes. So, what does today's discussion ultimately mean for IQD and VND followers? It means there are legitimate economic developments worth watching in both countries, but the available information does not establish that the Iraqi Dinar and Vietnamese Dong are destined to move together. Vietnam's financial market development may create positive conditions for the Dong over time, while Iraq's monetary and banking reforms could influence the long-term outlook for the dinar. Yet the path for each currency will ultimately depend on its own economic fundamentals and policy decisions. The most important lesson is to remain focused on confirmed information. Exchange rate changes can have significant consequences for consumers, businesses, governments, and financial markets, so responsible analysis should always distinguish between a possibility, an economic forecast, and an officially confirmed policy decision. For anyone following the Iraqi dinar, the next stage is not about waiting for a guaranteed overnight event. It is about watching the economic indicators and policy developments that could actually influence the currency's future. The same principle applies to the Vietnamese dong. Stronger economic fundamentals can create a healthier environment for a currency, but the timing and size of any exchange rate movement cannot be guaranteed in advance. As we continue monitoring developments, remember that financial markets can change quickly, and even credible forecasts can be wrong. Always verify major currency claims through official sources and reliable financial reporting before making any financial decision. Thank you for watching Iraqi Dinar News. Make sure to subscribe to the channel and like the video for responsible, factual, and balanced updates on the Iraqi Dinar, Vietnam's currency, and major developments in the global financial system. This content is provided for informational and educational purposes only and is not financial advice.